everyone has a plan until they get punched in the mouth. And if you're in charge of risk, expect the punch in your mouth. Who expected a pandemic in 2020, right? I mean, things happen that just come out of the blue. You did everything you could. Your job as a risk professional is to never go, I didn't think of that. Your job is to think of everything and have a plan for it.
And welcome to another episode of Banking Matters. I'm Linsey Hugueley, and joining me today is Mr. Bob Simpson. Bob is a nationally recognized expert in mortgage fraud detection and anti-money laundering compliance. He brings deep, real-world insight to the front lines of BSA AML enforcement, having run the country's largest mortgage fraud investigation firm for more than 20 years. He is an ACAM certified anti-money laundering specialist who now trains mortgage lenders on fraud prevention, suspicious activity reporting, and risk. He teaches BSA compliance in person and through his online courses and performs BSA audit duties for his bank, credit union, and lender clients. Welcome, Bob.
Linsey, thank you very much. Happy to be here.
Yes, I know that our conversation today is going to be super beneficial for our listeners, but first, here at Banking Matters, we always like to hear how our guests got their start in banking.
I was working as a lawyer representing mortgage bankers, and I watched people coming into my office dressed a whole lot better, making a whole lot more money than me, and I thought, I could do that. So I left the practice of law after a couple of years and got into actually loan origination.
That's awesome. That is the one thing that I have not done in banking is originate a loan. I think that I have done everything else besides that and IT.
Excusable.
So, yes, for sure. So today, I would like for us to just dive into risk assessment. How do you implement them? What do you need to do to make them great? What are we looking at when we do them?
All right, it's a great topic. Let me start here. I went to a risk conference in New Orleans almost 10 years ago now, and the speaker said, how many in the room here trained in college formally to be a risk assessment person? And one hand went up in the whole ballroom. And so he said, I understand then that basically the rest of you stumbled into this profession, and everybody laughed. We got to risk assessment by some other means than intentional. So risk assessment is a position that requires you to be savvy, requires you to, that great Wilford Brimley line in The Firm, I get paid to worry about things when I don't have any reason to worry about them. That's your job as a risk assessor, is to figure out what the risks are and adjust for them. So having investigated fraud, having been a lawyer, having run a business, and then about 10 years ago, having gotten my private pilot's license, I have a lot to say about risk assessment. I started my pilot training not knowing that risk assessment was going to be about half the training. The things a pilot does to assess himself, the plane, the passengers, the plan, you have a lot of things to worry about. And I learned a lot from that experience to add to my already, I thought, robust risk training. You know the acronym SMART, to make your risk assessment specific, measurable, achievable, relevant, and timely. And you go, yeah, okay, I got it all buttoned down. But I've learned to add 4 things to that list. And the first one is to set your priorities as an organization. What are the things that are most important to you? We watched in the Great Collapse a bunch of really well-respected institutions get their priorities out of whack. They chased market share at the expense of credit quality. Hard stop. You who have lived through it, you've seen it, you know that bad decisions were made because priorities got out of whack. So the first principle that I would want to convey is that you as a person and you as a company need to set out your priorities, list them, put them in order. The simple one that I can give you is for a pilot, it's aviate, navigate, communicate. Keep that plane in the air, go somewhere intentionally, and oh yeah, then talk to passengers and air traffic control and everybody else. But your first priority is to keep that plane in the air. So that's a very simple but very effective way of illustrating your priorities guide your actions. You know that feeling when you're about to land? I've had it 2 or 3 times when the pilot decides for some reason they're going to go around, and you think you're on final approach, and then all of a sudden zoom, and you go away, and you're coming back around. Very discomforting. It's a terrible feeling. Why aren't we landing anymore? The pilot doesn't talk to you. There's a lot going on in that cockpit at that moment, and you are his third priority, and he knows you're his third priority. He's not talking to you. He's got to fly the plane first. Even the tower is surprised when the pilot goes around. He doesn't ask for permission. That's his call. He guns it up. He puts up the flaps, and he takes off. He'll talk later. Right now, he's flying the plane. And so I heartily endorse this idea as an institution is really spitball this, really get your team together and talk about what company values are. I think, the mission statement is such a facile, shallow, easy way to say, well, this is who we are. This is what we're doing. Much better is to really outline who you are in terms of your priorities. That'll really give people an idea of what you're about as an institution.
That is a great point. I know that I've been through the process several times with banks that I've been involved with and worked for of hammering down the lens through which we make decisions. And it makes so much sense to carry over that lens when you are preparing and looking at your risk because you're thinking, where are we going? What are we looking at? And what is the end goal? Because honestly, if your end goal is to though your end goal may not match the level of risk that you want to take on as well. There's just a ton of factors, but I do think having that lens of priorities to look through will help make it more. You'll have more discernment in how you go through the process.
It's a brutal conversation to have, to actually voice to your people, will we cut headcount before we cut benefits? Ouch. That's a tough thing to hear. But what's our priority? What are we doing? Have we thought through this? Will we cut benefits before we cut people? Is that a group decision, or is that a more shoot from the hip thing? These are about your priorities. These are about who you are as an institution. And so, yeah, risk assessment requires these really honest talks about what we value.
For sure. And so I know that you said you had 4 of these additional acronyms. After taking that lens of looking through your priorities, what would be the next step?
Well, the next one that I really strongly advise is also kind of pilot related, and it's create checklists. Let me talk about creating checklists for a while. And again, I became a fan of this during my pilot training. The Sully experience, landing on the Hudson. Okay, here's a guy who loses both engines in his plane shortly after takeoff from LaGuardia, and we all know the story. He puts it down safely in the Hudson. But that movie's amazing because it shows you clearly that even in that high pressure situation, that first officer, Jeff Skiles, is reaching for a checklist. And even as a pilot, I laughed. It's like, seriously, there's a checklist for if we lose both engines shortly after takeoff, and Skiles goes straight to that checklist, and they're going through it. They've got very few seconds to make decisions, but they grab the checklist during critical times, and they make sure everything's done. They make sure everything's buttoned down. I can't stress enough the importance of having checklists in your business for key decisions. When, my world, I come from the mortgage fraud investigation world. That's been my career. When you find fraud? What are your checklists internally? Who gets alerted? What's the chain of command? What evidence is required in order for a processor or underwriter or loan officer to report that they think they've found fraud? What's your checklist if a processor suspect a loan officer, an internal hire, is engaged in fraud? Is there a separate secret way they can inform management? What are the protocols in the event of bad things happening? And again, it's this frank conversation you have to have about, what if? One of the examples I use, and I'm not going to name him by name, you can Google him. He was a former MBA chair, and he ended up in prison for stealing a bunch of money from his mortgage company, redirecting wires, double funding loans, wired a bunch of money to his home builder who was building his dream home in Colorado. And I thought about that case long and hard because I thought, what junior employee would dare tell the boss, no, I'm not going to wire that money for you? Nobody. No first, second, third year hire is ever going to tell that big dog, I'm not wiring that money for you. There have to be protocols in place if you're going to wire money. I can only wire money to, and then there have to be rules. And just because the chief is standing over your shoulder telling you to wire it, you have to have a written protocol in place that has to say, I'm sorry, I can't wire those funds, because if you don't have it written down, there's no junior employee that's going to resist that temptation. So this is, when I say to write checklists, there should be a checklist for wiring funds. Discovery of fraud or misrepresentation, there should be a checklist for that. If things happen that are going to require elevation of the issue, make sure that you've thought through all of those steps.
Absolutely. I know that it's from a wire standpoint, I've been in the position where I have had to say, "Oh, I'm sorry," to the CEO and the owner. "I'm sorry, you didn't submit this the right way." And I've had to like go back and get the information done through our proper procedures
You
because he was
actually
trying.
had the guts to do that, Linsey?
It was a very small family-owned bank, and I knew, and their compliance and internal auditors were also I was very close with them too, and I knew, I was like, if I don't do this, and I don't know, he was also very understanding. He was like, oh, because I had been told that he will do this, and so it had already been open to the fact that he'll probably try to do this. You just have to remind him.
Okay.
So it was they are still a very up and up bank, still family owned and everything like that too. But that's just how he was. But we had those procedures. I had been warned, but I do think, had I not been given the heads up of, hey, this may come through, I do wonder would I've been like, oh, okay. But I also know that it would have been caught in the second review had it not been documented correctly, because they were on it at that place.
Yeah, that's great. That's great. Not only that your chiefs over there were aware of and needed to comply with the rules, but that you called it out to their attention. The dynamics, the power shifting dynamics have a lot to do with that, don't they? Whether somebody is brave enough to say, I'm sorry, this needs to be done differently. It's a big
Yes.
deal, especially for a junior employee.
Yeah, but he was also an owner that would come once a month to everybody's office, check in with you. He knew all my kids' names, and now his grandsons and my kids are the same age. Like, it was just a very personable relationship too. So it wasn't so stuffy and official to where it would have felt intimidating. So it was a very good atmosphere and culture that they had going as well.
I worked for a mortgage company in Southern California where the owner was a tyrant and a screamer. And one day I remember him screaming at his admin that he found out she was late on his Ferrari payment. Okay. He was screaming. So if he asked her to do something illegal, there was no question she was going to do it because he was brutal. Well, about 4 years later, he makes the headlines because he goes to prison for wiring himself a bunch of money out of the mortgage company. And in the newspaper article written about this guy, one of the things said was that the money was going to pay for his Ferrari. And I went, yeah, I can tie that circle back. I know where that started. Some of these characters are very hard to resist. They're very hard to resist. And without protocols, people can be talked into doing things that are kind of sketchy.
Absolutely. And honestly, from my standpoint with the banks that I work for, I preach procedures, not from so much from the what would you do in a pressure field situation, but more of a, okay, we only do this twice a year. If we don't have procedures written, we're going to fumble through this and most likely make mistakes. Or if it's something you do once a month, even until you've done it for a year, it's not going to be very smooth. And even then, I can still have my backup come in and follow those procedures, the checklist, and make sure that that's still done correctly and accurately. It just makes everything run so much smoother.
Yep.
And so we've talked about having your priorities set and then also checklists. What is next?
Training. You're never too old for training. I mean, the way I start my conversations when I talk with my lender clients and I go in and train on Bank Secrecy Act, I say, Michael Jordan had a coach. Don't tell me you don't need to be told where to sit or stand or move or play. Everybody needs a little help to get their shoulders just right and the knees, the hips, or whatever, get in the right position. Never discount the value of training, even for your most senior people, to hear again some of the things that matter about compliance, Bank Secrecy Act, employee training, protocols, these checklists you've created. Senior management should get skills commensurate with their level of expertise. For example, and I will just say, when I talk to boards, the conversation about Bank Secrecy Act is more along the lines of, here's how you guys are going to get in trouble if you don't make the right decisions. And let me show you where, according to the consent decrees and other things that are going on, here's where people are getting fined, both personally and professionally. And then you see all the board members sit up and they're like, oh, well, this could be personal. Yeah, this could be personal. And here's how you guys are going to get in trouble if you don't pay attention. That's way different training than a brand new hire who's never heard of the Bank Secrecy Act, who has no idea what we're talking about. And you're having to introduce money laundering to them, placement layering integration. Okay. Breaking Bad, Ozark. That's not the training that you give to your corner office. And so on the topic of training, make sure it's appropriate to the position that you're talking about. The training for you, like you just mentioned, for wires. Anybody in charge of wires should be fully versed in the risks of distracted wires, of waylaid wires, because that's a big deal right now, to grab somebody's wire. There are services out there now designed to protect against those really ghosted emails, things that steal your routing number and account number and misdirect your wires.
I just had a bank get hit. Their title company had a ghost email situation come in, and they sent the funds to wherever. And it was, and they sent me screenshots of the fake email. It was spot on. I don't know that anyone could have noticed a change, but it was the fact that they now have procedures set so that when they do receive that information of, okay, what are we checking? What are we looking at? Before verifying before we move forward with sending these funds.
Yep.
And it was a title company they've worked with for 20, 30 years too. So very unusual.
My daughter almost got hit. She actually went to Wells Fargo, arranged for the wire, drove away and said something doesn't feel right, and she drove back. It was waiting for a second signature and hadn't gone. This was her down payment for her house. And when we looked at the email, it was exactly like you described. It was somebody ghosted, grabbed her escrow's signature. It looked for the world like it was from her escrow company, and it was not. And Lizzie stopped it. Didn't hit her. But the same week that happened, I shared that story at a conference, and a guy came up to me afterwards and he said, they hit my accountant. They grabbed my payroll. He goes, it wasn't a huge figure, but it was 2 weeks worth of payroll for my company. And he goes, it hurts a lot. I go, yeah, I'll bet that hurts a lot. So the subject of training comes up around job specific performance. What are you likely to see? And that is, the average person in the public has no idea the amount of fraud and risk that we face in the banking industry. They have no idea. They see some shows on television and they think it happens occasionally, but it really is. It's just so out there in terms of the numbers. It's a big problem. And when you're hiring people into the industry to come work for your bank, they need to understand how money laundering works, how muling money around works, how wires are distracted, this kind of thing. So there's really a bunch of training that needs to happen for somebody to feel like they're pretty good at our business. It takes a while.
Absolutely. It definitely does. I can say just over the course of my career, what I thought I knew when I started versus now my full, more robust understanding of everything. It takes not only the training, but time and experience and having cultures around you that build and value that too.
Yeah.
And expose you to it as well. Like I've had several supervisors that have been very transparent on, okay, these are the things that we've gone through. This is what we are going through. What would you do? They've included me. And so I'm a big believer that that makes a huge difference in just the how well your entire company can run when there is such an understanding of everything that can go on.
Yep. The final point I make in my training is something Mike Tyson said, which is everyone has a plan until they get punched in the mouth. And if you're in charge of risk, expect the punch in your mouth. Who expected a pandemic in 2020, right? I mean, things happen that just come out of the blue. You did everything you could. Your job as a risk professional is to never go, I didn't think of that. Your job is to think of everything and have a plan for it. Let me humbly say that I did nothing heroic here. I did nothing wrong. I just was the victim of somebody else's plane crash. A crashing plane hit my plane, and I lived and they lived. 10 years ago, I was done flying and I was taxiing my plane back to where I was going to tire up, get some gas, and be done. And all of a sudden, from about my 6 o'clock, this huge roar, bang, a plane comes over my head and I see it hit the pavement up here in front of me, skid about 100 yards and slam into a hangar. I shut down the plane. I get out. He took my antenna off the top of my roof. He damaged my right wing. He struck my plane as he was crashing. I only tell the story because I'm fine. He's fine. Everybody walked away from this thing. But I'd done everything I should to fly that plane safely. I did all my safety checks. And where do I get hit? Taxiing. Almost done. Within 50 feet of tying the thing up, I get hit by this Italian Marchetti. It's like one of those little Italian planes that you can pay $300 for to go up and pretend you're a fighter pilot and sit in the back seat and they fly you around. Okay. Guy lost control of it on takeoff and just veered right and slammed into me. Mike Tyson sprung to mind. Sometimes you just can't expect what's gonna hit you, and be prepared for that. It can happen. The pandemic surprised us all. There are things that can happen that are tragic and unanticipated, but your job as a risk professional is to say, what if? What if your CFO is a crook? I don't want to think about that. I don't want to think that our CFO is. What if? Your job as a risk professional is to get into all those potentials that could be catastrophic and prepare for it. That's what you're doing as a risk professional. So it really is the most interesting job you can possibly have in a financial institution, because your job is to be that wily, cagey character that's anticipating everything, unafraid to have those conversations with your people that you should have in order to not be Mike Tyson at the end of the day.
Absolutely. I can say, especially over the last 10 years, the focus of not so much. I feel like there's been a shift from audit, which to me is a reactory kind of stance of how banks we use audits, we see what's wrong, and then we make changes. But now this shift to more of a risk focus for honestly every area of the bank, we're finally getting to where we should be proactive and like you said, prepared for honestly whatever. And when I can say from the institutions that I've seen that are very risk focused and future thinking, and honestly very creative in the fact of they can come up with these scenarios. Those are the banks that are able to pivot and adapt the best.
Yeah, running scenarios is something like, the Department of Defense does for every conceivable scenario. It requires a creative mind. It requires a bold mind to get in and think, what would happen if we had a pandemic? Wow. Okay, where does it start? What's the transmission rate? I mean, you start to think about all the things that come into play. You'll recall, I mean, we all know, have been in the business. Pre-pandemic, there were institutions saying, well, you couldn't possibly run a mortgage business from home. You couldn't possibly allow people to run credit reports from, their bedroom. You couldn't possibly do loan servicing remotely. The mortgage industry went kicking and screaming into the digital age. They hung on to paper for as long as they could. But we've all learned. We've all learned that things can be done remotely. Kind of interesting that it took a pandemic to teach us all that. There will be another one. There will be other catastrophes that come up, and these are all on the risk officer's desk to make sure that they're thinking through them and what is the company response.
Yeah, absolutely. I worked with some banks in East Tennessee when they got hit with those massive floods. I think that was in 23.
Yep.
They had to relocate, they had to shift. They were working together as a large group of institutions to like funnel people different places. It was a mass effort. And to be able to pivot and, like I said, pivot and adapt to unique situations like that, it was thankfully they were prepared, especially the ones that I was working with. They were prepared, ready to go. They knew where they were going, but we were able to get up and running in a day or so.
Yep.
So, I mean, it is so important to think through all of that stuff for sure. And so as we wrap up, we also here at Banking Matters also like to ask our guests to leave our listeners a piece of advice.
Well, I think that if there's anything I've learned in the course of my career, is to just surround yourself with well-intentioned, smart people. And I've been so fortunate in my career to just have the best people working around me who, if they don't know how to do something, they'll figure it out and they'll try and they'll always keep your best interests in mind. I had two really incredible, smart IT people working for me, and I loved hearing them argue about the best way to get something done. And they were both so smart. I had no opinion. This was their world, but they really cared to get the job done right, and they didn't always agree. And I loved so much. So if I can say anything, it's just don't claim credit for other people's work. Let them take the glory. Let them take the team forward, helping you, and just enjoy watching talented people move you forward.
Absolutely. It's definitely a collective effort. Well,
Always.
thank you, Mr. Bob, so much for your time. This has been a great conversation. And for the rest of our listeners, that's Banking Matters.